Continues to be a very challenging month for interest rates. We are seeing them nearing fresh highs, but a little bit of improvement today, and we're going to talk about that on today's video. So let's see if this trend is going to continue, and let's talk about where rates have gone. We'll start by taking a look at the numbers. This is actually through yesterday, y'all. I'm still waiting for today's pricing from Mortgage News Daily, but I've got some stuff I have to take care of today, and I wanted to go ahead and get this call out early. So yesterday, we closed the day with the national average, according to Mortgage News Daily, sitting at 7.43%. We were at 7.37% a week ago, so we're a bit higher than we were this time last week. And 30 days ago, we were a third of a point lower at 7.11. So we've definitely had a rough month in the bond market, owing to all the inflationary news that has been coming out that just shows us it's far more stubborn than the markets would like, at least more so than the bond market would like. We did see a retreat from the highs, though, because on Tuesday we were sitting at 7.50%, the highest that we had been going back a number of months. So certainly the highest of the year was hit on Tuesday of this last week. So the response from Israel to Iran with an attack into Iran did put some jitters into the bond market. Those types of regional instabilities, those types of geopolitical instabilities around the world do cause a bit of a flight to safety where people want to be in fixed income securities and they want to pull out of the relative volatility of equities in the stock market. You certainly see that. We've seen a lot of Dow weakness this week as well, y'all, well off the highs on the Dow. So you see a lot of bond buying in the face of that. That said, Fed was quick to step in. The New York Fed Chair John Williams came out day before yesterday and said, look, hikes are not off the table if we don't see good inflationary news going forward. That's the first time that hikes have been entered into the conversation. No one's taking that seriously, y'all, but the bond market, when it's already this jittery, took that as negative news. We have Austin Goolsbee speaking today, another Fed chair, and we will see what he says. He's generally far more dovish when it comes to future cuts, so his comments may temper those of John Williams's comments. However, it doesn't take much to rattle the bond market, y'all, and anytime you hear something akin to what John Williams shared yesterday, it's going to move the markets, and it certainly has done that. So we are seeing some pressure on bonds today as a result of that. Bottom line is, y'all, we're in an escalating rate environment over this last 30 days, pretty significantly so. I don't think it's going to be a permanent trend. However, it does seem to be forestalling the eventual cuts that the Fed is going to be doing. We may be talking more in future videos about how the Fed may not cut this year. So that's going to reset pricing going forward. And it's a great opportunity for us to talk to our buyers because rates will eventually come down. There's no question that rates will come down. And they're likely to come down in the next year or two, just based on the tightening cycle and the rapid nature of it that the Fed has given us, and the fact that we have seen significant strides in inflation coming down. If y'all remember, we were looking at year-over-year inflation in the 9s just 18 months, 2 years ago, and we're now in the 3s. So inflation is definitely slowing. So as it nears that benchmark target of 2% that the Fed is looking towards, you will see interest rates start to come down just in anticipation of the Fed being more friendly to the bond market. So we're going to continue to keep an eye on it. We're going to continue to focus on these details and bring you these updates. As always, please continue to share with your clients that they should marry the house and date the mortgage. We're starting to see supply tick up some locally, and we're seeing some softness in pricing, so that I am seeing significant concessions on a number of deals that we are writing and putting in title right now. So that's going to go away, y'all, when rates start a downward cycle. There is a lot of merit to the conversation that folks should be finding the house while they've got better supply. They should be building in some concessions. Go ahead and have the seller pay for your future refi in the form of closing costs that you request them to pay on your current contract. That's a great strategy to employ. And then when rates come down, trust me, you won't have to call us. We will be on the phone with you offering that opportunity. So in any event, I hope this is helpful to you and to your clients. As always, we're honored to have your referrals. Be blessed this weekend. Stay safe. We will talk to you next week.